All right, Kunal Shah of ICICI Securities is joining us now to talk about his latest note on private banks and their incremental market share. Kunal, afternoon. Thank you so much for joining us. Talk to us about your observations. Which are the names which have been gaining incremental market share lately, and how also then we can subsequently talk about the valuations.
Yeah, afternoon. So overall, when we look at in terms of the banks clearly gaining the market share in the incremental growth, so it's HDFC, Axis, Kotak, wherein we have already seen the growth momentum being relatively better compared to that of the industry average of 7% plus. So that's where some of them have been gaining. The other one, which is maybe less talked about, is Federal Bank. Okay, wherein in terms of the incremental share in the growth is almost 2.5% compared to its outstanding market share of 1.1%. And there are other known names which are which are growing at a very maybe at a rapid pace, includes AU Small Finance Bank as well. So some of these banks are gaining the market share, and that is particularly coming at the cost of the PSU banks, which have lost the market share all through. So if we have to look at it last 7 quarters during the pandemic, in fact, private banks have 60 to 80% share in the incremental credit, and it's significantly lower for the PSU banks. So it's coming at the cost of them.
Fair point. How are you analyzing the valuations, Kunal, of ICICI Bank versus Kotak and Axis? All these top 4 or 5 of them, they suddenly, after a 1.5 year of lackluster movement, there seemed to be a lot of interest coming back from the market side. In fact, the last leg of up move was kind of propelled by banks. But how do you see the valuation? Which one is the most attractive right now?
So we like Axis, SBI, and HDFC Bank. So in fact, when we look at over last 1.5 years, there's not much of a re-rating which has happened, and we are now seeing better growth coming in from there. Asset quality issues are stabilizing. In fact, this quarter we will see slippages and credit cost being much lower compared to that of the run rate in H1, and there is improved visibility on the better ROA trajectory for this bank. So when we look at it, in fact, our favored picks within the private banks are Axis and HDFC Bank, and amongst PSU banks, we like SBI.
What about the third quarter earnings season? How do you expect the earnings quality this time around? If whatever on ground you have your observations and your numbers show, which ones could outperform or post healthy numbers this time?
So now overall, in terms of earnings, so there is a pickup in the overall advance growth momentum. Margins will be stable. As I highlighted, the credit cost and slippages would be lower compared to that of the first half run rate. So for the entire banking universe, we are seeing 8 to 10% kind of operating profit growth, and in fact, in terms of the earnings growth, it would be more than 35%, and that's primarily coming because of the lower provisioning compared to that of Q3 of last year. So on a year-on-year basis, we will see more than 35% earnings growth for the banking universe, and 8 to 10% operating profit growth.
Right. All right, Kunal, we'll let you go on that one. Thanks so much for your time.
Thank you.